Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. Hello, my name is Tiara Sri Wulandari. I'm a student at STEI SEBI, majoring in Sharia Accounting Class 2019C. Here, I will explain what products are in the bank. Here, I will discuss about the notion of a bank, types of bank, and what products are in the bank. What is a bank? Bank is a place to save money, borrow money, and also place to take money. Kinds of bank. Types of banks are divided into two. The first is a conventional bank. Conventional banks are banks that carry out conventional business activities, which in their activities provide service in payment traffic. In general, or procedural and regulations set by the state. Conventional bank will accept all form of investment in all lines of business and long as they are in accordance with established requirements. Conventional banks are only profit-oriented, charge interest as a price and for their bank service. The bank uses or applies various fees in a certain nominal or percentage. Okay, and the second is an Islamic bank. Sharia bank is bank that carries on business activities based on Sharia principle or Islamic legal principle regulated in the fatwa of the Indonesian Ulama Council, such as the principle of justice and balance, benefit, universal, and not containing gharar, misir, usury, wrongdoing, and haram object. Law number 21 of 2008 concerning Islamic banking. Okay, I will discuss the range of banking products. There are several types of products offered by banks, among others. Number one is deposit. Number two is invitation. Number three is credit. And number four is insurance. For deposit, there is one current account, saving, and deposit. Number two is investation. There is a mutual fund and securities bond. And number three is credit. There is a provide credit in accordance with needs such as working capital, investment to buy a house, and others. And number four is insurance. For insurance, there is in collaboration with insurance companies selling insurance product and product bancassurance. Well, let's just talk about saving products. The first type of deposit. Number one is zero. Demand deposits are a form of savings from customers that can be withdrawn at any time and can be used as a means of payment. Withdrawal of money from demand deposit is done by check or demand deposit. Number two is saving. Saving can also withdraw at any time and can be used as a means of payment, but the difference is withdrawing. Funds from saving can only be drawn at ATM machine. And number three is deposit. Namely, time deposit for withdrawal have been determined or agreed upon by banks and customers, so it cannot be withdrawn at any time such as demand, deposit, or saving. The time period starts from 1 month to 24 months. Both demand deposit and saving are both transactional in nature. What is meant by transactional here is that the customer can use the money in the checking account at any time, but generally the demand deposit is used by companies or individual customers who have business. Because with current account, customers are more free to transact. Because the nominal transaction that can be used is more than saving account. In addition, Funds for withdrawals do not have to be done by the account holder's customer, but can be done by a third party. So, for example, the zero owner gives a check or zero to another person to be able to disburse an amount of fund is accordance with the nominal stage on the check or billet zero. Next, investation. Now, number one, securities or bond. Securities or bonds are debt securities issued by companies or government for a certain period. The type of bonds are number one, government bonds, number two, corporate bonds, and number three, retail bonds. The three bonds are based on the bonds issuer. And number two is mutual fund. Mutual fund is an investment cottage where investment funds collected collectively by investment managers to be invested in a securities portfolio. There are four types of mutual funds, namely, number one is market, number two is money, number three is fixed income, and number four is mixed and stock. Based on securities or investment is instrument. Next is credit. Credit is the provision of money or bill that can be equated with debt, based on an agreement or loan agreement between the banks and another party that requires the borrower to pay off the debt after a certain period of time with interest. And the last is about insurance. Insurance is an agreement between the guarantor and the insured that requires paying a premium to provide compensation for the risks of loss, damage, death, or loss of expected benefit, which may occur over unexpected event. Thank you for your attention. Wassalamualaikum warahmatullahi wabarakatuh. Bye bye.